Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Monday, the 1st of October, 2007. The market's closed. S&P 500 finished with a gain of dollar, what is that, about 86 cents or 1.22% according to my screen. And it's coming very close to a new closing high, new all-time closing high, actually, if you look at the monthly time frame. I'm not sure what the old high is on a closing basis back there. But on a weekly time frame, you can see that we're just about ready to break through that level, and that this high right here was 155.07 from that close right before that large sell-off that everyone seems to have forgotten about. So the good news is the market's back on track. It's holding above this rising 10-day moving average, and we've got the 50-day moving average now heading higher as well. So we've got a rising 10, 20, 50, and 200-day moving average. On Friday, I thought the market was acting somewhat tired for its inability to really do anything for the last 3 days of the week. I was encouraged that it held above the 5-day moving average and was basically neutral between this low here of 151.65. Thought it needed to get above 153.10, and it did that early on and then continued to squeeze the short. So what I was saying, there was no reason to technically be worried about the market, but it seemed as though the market was getting tired, and maybe that some of these speculative moves signaled that the market was due for a correction. But once again, the only thing to listen to that pays is price, and price action continues to scream bull market here. So when it does scream, though, it means there's a lot of emotion in the market, and it's always just prudent to maintain your discipline and keep your share size reasonable, and expect that we will have corrections, but they should be short-lived in this environment. So once again, the market, the benefit of the doubt, continues to go to the buyers. The semiconductors today were able to make it up to the high end of that range that I've been talking about, really thinking it needs to get above $39 a share. And this market's, well, it's healing, like I've been saying in here, that the higher lows and this level of resistance represent a market that's healing. We've got a rising 10 and 20-day moving average there above a 50, and the 50 is starting to flatten out and looking like really closing above that $39 level ought to be what it gets going, what gets this market going. You can see that the highs from last week were at around this 38.80 level. The market did break past that, pulled back, had another move higher from there, and then kind of closed right near that level late in the day as well. So it's building strength. It looks like the buyers are gaining control, and it's looking a lot healthier than it has for a while in the semiconductors. If you look at the weekly time frame, we've still got a pretty bullish picture here. But the intermediate term, it's definitely looking better. We've got these higher lows in here. The market broke past some resistance recently. That 38.40 level had been an important area. Now it will continue to be going forward, but for now I think the more important level from the short-term basis is about 38.70 or so. Breaking below that, maybe you want to just become a little bit less aggressive. But the semiconductors overall, mainly I'd say neutral. The real strength today was this IWM. On Friday, I was a little bit concerned that it came back below that 200-day moving average, but I said that it's really got to hold this level right here, that it was at this area where there's a line drawn in the sand, and the buyers came in today and they took control of this market without a doubt. The resistance recently has been near this $81 level. That's the level that I kind of thought the market needed to get and hold above for a period of time. And you can see it did that early on, struggled with it a little bit, but then the real buyers really came in. It's interesting that Friday too, I noted that there were these two drives lower on increasing volume, but I guess that was the bears' last chance to take control of this market and drive it below that 200-day moving average. But now it looks like the buyers are clearly back in control. We've got new closing highs on this market from the post-Fed move. So the buyers are back in control of the IWM, and that line in the sand has been captured by the bulls right now, and that's the way you've got to look at it. Short term, 81.20 or so should be the more important level of short-term support, and as far as upside goes, it could go on to test these highs here. So market looking a lot better for sure. The Qs have been, as I've said, in their own little world, just grinding away, making new highs every day here for the last 2 weeks, it seems. And it's just looked a lot more bullish since that post-subprime recovery, that this market was the first to really break the downtrend line and then make these new highs in here. And now we've got a market that still continues. I said that the trend line was broken on Friday. That was the this trend line right here. That trend line was broken, but now you can look at it and see that this larger trend line that goes back a couple days had actually held. And more importantly, it was the rising 5-day moving average that continues to give us the benefit of the doubt. Again, I'm going to repeat, the market is clearly extended, but that doesn't mean sell short. Anyone who's been selling short has been getting their head handed to them, and there's no reason to look for a top, but just be aware that the market is extended, and that means risk management becomes even more important than it usually is, because there's always the possibility of that pullback, but no one's able to consistently pick tops with any consistency.